how to use sectors to find setups. In the first part, we looked at like how you can set it up in Telechart, and there were a lot of questions yesterday in terms of like the actual setups and actual scans which I'm using. So I'll just go through it before doing anything. This is basically what you're looking at is like sorting this by various percentage changes. So here this is like percentage change, which is basically a price percentage change. If you look at like it's basically it's a price percentage change, which is a standard thing which you can like find in your Telechart thing. Okay, now what about this phi and tan? This phi is basically, if you look at it like again, this is something which is a column which has been set up, and similarly 10 is a column which has been set up, and YTD is a column which has been set up. Now in order to set up a column, what you need to do is you need to go to indicators in chart and plot. And indicators in chart and plot, these are like all the indicators which are there. Some of these are inbuilt, like if you're looking for YTD, and you'll see YTD percentage change, and you can like just click on that and it will be inserted as a column. Now if the things which you are looking for, or like the phi and 10 are not there, or they are there but like they are in a different format, you can like say, if you want, you can like look at price percent change 5 days, and you will find that there is like some sort of this thing. I don't know why it's gone to the mutual funds, but like if you see here in the price, there is a price percent change 1 week as one of the things which you can put in. But I would rather create my own, and in order to create that, it's very easy. Like say this is phi. Okay, so in order to create, you write an indicator formula. So if you want to write say C by C phi, is like basically which will tell you how much a stock or a sector has gone up or down in last 5 days. So this C by phi which you see here is C by C phi. Okay, the 10 which you see here is C by C10, and the 52 week daily which you see here is basically C by max C252, which tells you like say if today is the 52 week high, then C by max C will be 1, and if it is like say down say 9%, then it's like 0.91. say this is like this sector is at 52 week high, versus this is like down 25% from 52 week high. That's how you can figure that out. So those are the things which I have set up, and you can set up as many as you want. But remember, this is indicators. Okay, so that's like there's some confusion for like, most of the questions which I got yesterday on the video were about that. So again, I will show you this library and indicators, not in conditions. Conditions are something which is true or false, while indicators are something which are like basically give you values. Like these are values. So if you're like say you sort this by this, and what does this mean? This means that this particular sector was up 5% in last 5 days, or if you see this, this is like up 3% in last 10 days, or if you do by YTD. The YTD is like slightly different. I don't want to get into the technicalities of it, how Warden calculates it, but it is annualized, so it's like 22% it is saying. Okay, so that's it. So once you set up this, basically these columns you need to only set up once, and there are a whole host of other things which are there on my thing which are not necessarily relevant to the sector thing. So you basically need couple of them, 5, 10, and if you want you can set up a 21 days. So for that, what you can do is that 21 days or 25 days will be 1 month. So in order to do that, what you can do is you can go here and write indicator formula. I'll name it 25 because that way it is easier. So C by C25, which will give you how much a sector is up in say 25 days. Okay, and so once you have set up, it is here. Now I want to introduce it here after this. So insert column, I go to insert column, and I look for my indicators which are like say, and I put in 25. Now I can edit this. I don't need like, can I say by default it will put like in a daily in front of it. I don't need that daily word, because that way you can reduce the column, because this column is not going to have much of a thing. So you can like reduce the column because the values are not going to be very high. So that's how you have all these setup, like say you have this column setup. And let's start by looking at like there are other things, couple of things. Yesterday I said like look, you can use the Morningstar indexes which are there somewhere in the main. If you see Morningstar industry groups, now I spoke to somebody in Warden yesterday, and in the new version, this is like version 16.0. I think from version 12 onward they will discontinue using Morningstar industry groups. So that the only group which they are using is the sector indexes and industry indexes. So the Morningstar group, that's why I will not give you that component list. So these are the industry components. So we are basically start by looking at sector, but sector is of not much use because you're looking for say, but like let's start by looking at sector. So what do you look at it on a daily basis? Because remember, if you go through my yesterday's video, that's a concept, but in order to make money and in order to actually use it on a day-to-day trading, you need to set up a process, because unless we have a process, we don't knowing is not enough in the market. Always you need to have a process flow. So what kind of a process flow can you develop? So after the close or during the day, whenever you want to see which sector is leading. Now yesterday was everything was down out of this sector, and if you see, but like the real estate sector was holding up relatively well. You had utilities holding up well comparatively, they were not up, but like you had energy sector which was down 2.95%. You had like basic material which was down 2.75%, which is not really a problem because the sector had gone up a lot, right? And so that kind of a pullback is expected. Okay, so that's really what you want to see. And also you want to see on a 5-day basis, because one day doesn't make a trend. Trends become more apparent on a, like say in 5 days you see utilities are going up. So that tells you that look, and after a sideways correction in the utilities, money has started to rotate back into utilities, which are basically defensive sectors. Okay, so you have like, can I say, on a 10-day basis also you have utilities as the, or let's look at on a 25 days, which is basically a month, and you will see on a monthly basis the basic material was the top performing sector, energy was number 2, and healthcare was number 3, but it was like a pullback now, while the weakest sector was technology, obviously, like you can see that. Okay, so at this level, this is too this is not granular enough. You want to see it at a much granular level, and for looking at it at a much granular level, you go to industry, because that's like where you can find things. Okay, so we start by looking at which industry out of this was like up most yesterday or positive. So you have REIT, healthcare facilities, which are up, and if you look at like say this REIT healthcare sector by your 52-week high, they are also were at 52-week high. So they've been like going up for some time, and they went sideways. They had a correction, minor pullback, and then they bounce back. Now you can then like okay, look at okay, I want to see which REITs are doing well, because the REIT is where which is attracting money. So I want to see like what REITs are doing, and then when you click on this particular thing which you see, you will see that there is like say and once you go here also, you can sort by the same thing, which is basically you can sort it by the percentage change, and when you do it by percentage change, it will show the same kind of a percentage change for the stocks. So if you see by the same percentage change, you have like Sabra healthcare, which was up, you had SCN. Now this is a setup which might work. Like this is a stock which went sideways. There's a range expansion. We know stocks move in the direction of range expansion, so you might decide okay, that's one which I want to put some money into. If you are really into REITs kind of things, they tend to be slow moving. They are more for like dividend and other things. They do make moves, like they don't make big moves basically. So this way you know which REIT was basically doing well out of that particular sector. So let's go to the sector. Yeah, consumer electronic. Now this is just a bounce. You don't want to waste your time looking at stocks in this sector unless you're looking for a short, because I'm sure this consumer electronics is again driven by Apple basically. And if you see here, and if you look at like percentage change, you'll see that it is like, and I say Fabrinet was up in it, you had like Woozy up, and you had Apple up. Now one of the things which you need to understand is that in a sector, what they do it's a basically weighted by capitalization, but it is not simple capitalization weighted. That means like, they just don't take capitalization of Apple and add it to capitalization of Fabrinet and Woozy and all, and then like, divide it by the number of stocks and then calculate. It is what they do is like they take the square root of the capitalization, so that way the larger stocks get a higher weightage. So that's just a technicality, nice to know, or like to understand why when a sector is moving, if there is a large stock which is like in a down or up in that sector, the sector will move much faster, because that quickly like changes the um, calculation, because it will have a higher weightage, because the way the weightage is given is like, in order to calculate the weightage, they'll take the capitalization and do a square root of the capitalization and then add those and then take a um, average of that, or divided by the number of components in that particular list. So Apple is what like in a bounce back, but that's not really what you're looking at. Look, and again, here is a sector which is bounce back, but this is not really a continuation move. Again, probably this has broken down. So these are all sectors which are just bouncing back. Your healthcare, which was trying to bounce back, drug generic, which is where VRX and all was like. So money was flowing into beaten down sector, which has been the theme in this market for and it wasn't really like, the sector wasn't really up much, but like if you want, you can find out which stock was up. Like you see VRX was one of the bigger stocks in this, and that's like, that was up, so that's why the sector didn't go down, or MNK was up, so that's what. So you're basically looking at what was up at the first, and then if you see something which is good in that, in terms, if you see a sector like, say here, your healthcare information services breaking down, clearly this looks like a big breakdown. Now we want to find out for shorting what is there in this particular sector that is breaking down, and we do this, and once we do that, in order for these columns to match, okay, like what you need to do, and this is another trick which I will tell you, is like, you say, once you have this column set like this, okay, you want this column to be there everywhere same, then you go here, okay, click here and save this column set, okay, and when you save the column set, it will ask you save as whatever, but save as default for system watch list, easy scan, industry group watch list, and personal watch list. Once you do that, now once I have done this, like I went here, right, so if I am like, say, in this particular sector, which is healthcare information sector, and if I click on this, it is the same sequence in which the columns will come in, which I was struggling yesterday, but like, and I knew this trick, but like that while doing the video I didn't really immediately realize how to do it, but this is how you do it. So once you've done that, everywhere the column will come in the same sequence, and it is automatically sorted also. So because this was sorted by price percentage, this is sorted. So you see like, and a Teledoc was down, EVH was down, IMPR was down, IMS was down. Now see again, as I told you, you can look at it, because these indexes are capitalization weighted. If you see the capitalization, you'll quickly get an idea as to why this index was down so much, because the particular stock with the highest capitalization in that might be so if you see capitalization, you may not be able to see that column, but I can move that column for you people to see, is like, and I say the highest capitalization stock in that is basically CERN, okay, and IMS, and if you see IMS was down, so that's why that index moved. So these are some of the things which you will figure out once you do this daily, that which is the biggest stock. Like in most of these indexes, if you do this daily, you figure out which stocks are there. Like say copper is down, without looking at it, I know, you look at FCX is one of the bigger stock with capitalization in that particular sector. The more you do it, the more better you'll do. And again, yesterday I was telling you there is a way to find out from the if I'm in FCX and I want to find the sector, there is this next to that ticker, there is this symbol. So if you go on that and open click on that, you can open industry watch list. So if you go and see now here, your FCX down, your NSU down, you had copper down, SCCO down, LIVA down. Now obviously this has the highest weightage, that is why it happened like that. So now here what you see is like you have copper down, but this is not a trend change at the moment. It is too early to say this is a trend change, because it's just an extended trend which is having a normal correction basically, or industrial metals and minerals. If it follows through in 5 days, you'll know, right? And as of now, we don't have enough data to know that whether this thing FCX which fell down was just a correction because it had gone up a lot, or it's a start of a downtrend. As against that, if something is clearly in a downtrend, you will know by looking at it. So you know, okay, look, and most of the sectors which are extended, they were having a correction yesterday. As against that, this is a sector which is already down and is going down, and now that's like, and if you are looking for a shorting, the whole idea of doing sector analysis is not to increase your knowledge but to like make money. And in order to do that, you have to basically find a trading idea out of that. And so if you're saying, look, and this is a sector which is clearly in downtrend, it is like going down more, so I want to find a short in that particular sector. So now these are all stocks, most of them are already down 3 days in a row. I wouldn't advise anybody shorting something which is down 3 days in a row. Here is Real Good Solar which is down, but like say it's a 45-cent stock. You're not going to short a 45-cent stock. Jinko Solar, this might be from this bounce it has failed, so that might be a short. But like many of these are already down 4-5 days in a row. It's 3 days in a row at least, so that's not like something, but you can put that as one of the sectors which might set up again if there is a counter trend bounce and then it fails again. In this particular sector, First Solar is the largest in terms of capitalization, and as a result you will see that it had the biggest move, kind of a thing. Okay, so that's how you use this. So we know that the solar sector is in a downtrend. Now here is paper and paper products. Now this is the looks like the first day of downtrend again, but the sector is really trying to bounce back. So nothing much to look at, but like you might decide to just check it out, which are the stocks. Now this stock did like a breakdown big, so volume. So you might decide, okay, this is a stock which I want to put it in a checklist, in a watch list, so that if it sets up after, like, because there's a big volume breakdown, so likely to follow through in the direction of that. You don't want to be shorting, because a lot of times stocks break down like this and then they will have a counter trend move and they don't really immediately follow through unless the market is really going down. But if you start looking at this sector, you do see like there is follow through happening, like the stock is down now 3-4 days. So you know, look, and this is some sector which is worth keeping an eye on. Now here is a stock in that sector which might break down, so that you might put it on a watch list, and then that is how you create a watch list and see in that thing what is breaking down, because you have a double power. You have a stock which is breaking down and you have a sector power. That is really the thing. Now metal fabrication, now this is basically again extended trend which is correcting. So like this, if you keep looking at the top 10, 20 or whatever time you have, specialty finance is down. But like, see, many of these just look like a normal part of a correction in terms of like say extended trends going down, correcting. But like say computer wholesale, now this is just 4 days, but like if it continues down, then that is something worth examining. So that's how you start looking at this on a daily basis and find ideas. But you have to just like not look at only daily, because the real trends become apparent over a period of time. Like say here you have utilities now, so money has started going into utilities, or gold which is correcting now, which has corrected a little bit, like infrastructure operation. But like something which is down in 5 days, if you are looking at say shorting, now here is consumer electronic and Apple is the big player, so it is just having a bounce. But if it might have a follow through, and a sector which is breaking down like this is more likely to have a follow through, because this is a clear breakdown. You can see that like in a sector breakdown, counter trend move, failed. Here is a counter trend move and failed. So this is a prime suspect, or like a stock in this sector which is basically Apple. You have to put it in a watch list and watch it, like, because that might offer you a more better shorting opportunity with a counter trend bounce. If you look at it like say I know Apple is in that sector, but like say, obviously like it's near a low, so there'll be some sort of a support for some time. But like if this rally fails from here, then more downside is ahead because the sector clearly has broken down. So that you can see clearly on the 5 days. Okay, so like that you have to play this game because the sector breaking down is a powerful this thing. So say if a sector, this is where the sector was down like say for 11% in how many days, like probably 11 bars, that's 11 days. So in 11 days it was down around 11%, and then it had this counter trend bounce and it followed. So at that stage it will show up in your 10 days this thing. Okay, uh, or like, and if you look at 21 days, so you have to look at sectors on different time frames to find what is weakening and what is gaining strength. So you have this healthcare information services which are like now breaking down. Then you had like banks regional, which is not necessarily a breakdown. The clear breakdown you can see very clearly, they will just have high volume breakdowns. Data storage, you have gambling, you have textile manufacturer. Yes, solar is really a breakdown. See here, like, and you see minor bounce and then like follow through, and also the stocks have followed through. So that's how you look at like these in sectors. Now again, like if you look at the same way on 10 days, obviously you have utilities, gold, which are like already, which we had seen yesterday, not much change in that. But on the downside, you'll see that resort and casinos. Now see here is like something which is gone down in the last 10 days, but like the sector itself has been just flapping around, so it may not have much of a follow through. But like if you want to see a stock which might be setting up for short here, the large players in this are basically Las Vegas Sand and Win and MGM and all. So if you see like, and I say you'll see that a lot of stocks actually like pulling back hard, and you have like in a Las Vegas Sand, which is like in a high volume breakdown, it is going sideways. Now that's another stock which you might put in a watch list, watch for a further breakdown as a short. Again, like those of you who are Stockbee members, you know this is TI65. So TI65 is also turned negative, so the trend is turning negative, or it's a young trend to the downside. So that's what you can look at basically using that. So let's look at like you have airlines. Now these are the prime things which you should be looking at. Like say airlines, after like I say here like I see breaking down clearly in the last 10 days, you can see that it is down 10%. So this is another thing which you need to keep the airline stocks in a watch list, or watch them for a further shorting opportunity. Consumer electronic, that's where Apple is. Trucking, this is really looks like a normal correction as of now. Residential construction, where there are some breakdowns which have happened. See again, like after a breakdown there is like counter trend move and then it fails. So you have to sort over different time frames to find out. Now stopping and outsourcing, like again these are like things which looks like breaking down. So this is where if you're looking for shorting opportunities, you look at, or software infrastructure. So there it might be, I think Microsoft might be in it, I don't know. See Microsoft, see most of the time uh, I know most of the group's main players, because if you do this regularly, you will know every single player in that industry. So you have like that sector which was like Microsoft missed earnings, and then uh, that phenomena spread to all the other stocks in that particular sector. So you have Microsoft now, like say here down, it might bounce back and then might offer a further shorting opportunity if it is one of those stocks. I don't think that is like a very nice setup, because it's like tends to be, it has been cut in a long range. So I wouldn't really look at that. But like say airlines is something I would say that you look, and it looks clearly that there is a breakdown after a relatively long trend, because they were going up for some time and then they just like went sideways. So they might offer some opportunities for shorting. So that's like what you need to find, because it's like clearly continuously they were being sold for 1 2 3 4 5 6 7 8 9 10 days. Like if you see 10 or 11 days they went down. So a minor bounce, and then that will be the candidate. So that's how you have to look at this, using this information. And similarly you can use it on a larger time frame of 25 days, which is basically a month. So you'll see that obviously everybody knows gold and silver were oil. These were the sectors which are leading, which were the most beaten down sectors. While broadcasting TV is down, you have data storage. Now that's like an interesting sector to look at, because this is down. Most of the stocks already are down. See, that's why you have to look at like these trends on a different time frame, and you have to be very fast. Like on a 10 days time frame, if you had seen this was down and then it had a counter trend bounce and it was breaking down. Now the stocks in these sectors are basically the WDC is the large stock in that sector, Western Digital, and there'll be, I think, STX will be there, ScanDisk. So basically, if you look at it, if the sector is breaking down, big breakdown has happened. Nimble Storage, STX, see here, big breakdown. Now this is where you have to find these trends early in sectors, as I keep saying. If you look at that sector trend, and like, can I say here, if you had seen this and then you could see that this is setting up, and then first day when it started breaking down you shorted, then that is better than that. And same way it operates on the long side. If you see a big range expansion and it's like 3-4 days follow through, then you can look at a long opportunity. So the trick really to using sector is to use much shorter time period to find opportunities, because if you use a very longer time period, you'll miss out a lot of things. Like say if we use something like say um, uh, MDT, which is basically 126 days momentum, to find sectors, will be late, because by the time you can figure out that it is a sector which is going in MDT, it's made bulk of its move. So you have to use smaller time frames when you are using sectors. So I would say that use like in a time frames of 5 days, 10 days, 25 days to find sectors, and then identify stocks in that which are setting up well, or those are the one which you want to like uh, buy because of like they're setting up, or they have just started a trend and then they had a first pullback, or they had an orderly pullback, or they come in your anticipation scan. Then that's where you'll find good opportunities. If you do too long a sector thing, which is like 6 months and all, unless the sector has a very long term move, like which happened in the case of biotechs and all, most of the time, by the time you come to know, it will be time for that sector to start reversing if you use a too long a time frame to do this. So let me like reiterate some of the points, which is like which was main point of doing this video. How to set this up 5, 10, 25 YTD, whatever you want to set up. You go into library and create indicators and put them as columns. That's how you can do it. Some of them are pre canned indicators which are there in Telechart itself. So YTD is one of them, I think. Then once you set up this, every day you have to look at the sectors, or not the sectors, the industries which are up or down for the day. And if you see something which is like up or down and which is breaking out, and it is establishing a trend which will not be apparent on a daily basis, trend becomes more apparent on a 5 to 10 days basis. Say here, like on the first day, if it breaks out, you don't know whether this is a trend, but like by 5th day, look, and at least it has started trending, and by 10th day, look, and this is one of the best sectors in the last 10 days. So that's when you will see setup appearing in that particular sector. Similarly, like silver. So use 5, 10 and 25 days to find sectors, and YTD to know which are the sectors which are really as of date doing well, because many sectors, like say, I'm sure like even silver, gold, they might have a correction, but they might have more upside, because most of the sector trends, if there is they start going up, there is a fundamental reason why that sector starts going up. There will be a reason which will be structural, or there will be a reason which will be much more um, related to earnings or their sales, or something like that, and that will persist for 3, 4, 5 quarters many times. Like in a sector trends last for a long period of time. If you see like on a weekly basis, this sector trends was down, and it lasted for how many, like it lasted for multi years, like since 11 when it picked. This sector has been down 84%, right? On a similarly gold. So fundamental reason might have been there, or like in a steel, like it was down. So all commodities were down basically, because and the reasons why it has gone down. But when it starts going up also, like, and there will be a reason why it is going up. Or like, say, if you see recently on the downside, you will see that like sectors which are down are like the generic drugs or solar. So there is a reason why they are down also. Like, say, uh, obviously if you are in US, you will know that look, and the reason why this sector is down is because of so much many players in that industry like VRX and MNK and all have so much problem currently, or semiconductor memory. This is related to probably Apple and other technology companies not doing well, and so there is always a reason why sector goes up. It may not be apparent in the beginning of the thing, but like once it goes down for a year or so, things become apparent because the stocks start missing earnings and things happen. Like even in the biotechnology sector, if you see like, and it's down now, it's tried to bounce back, but I think it will have a continuation down move, probably more continuation down move is more likely, because the many of the big biotechs like BIIB and Amgen and all, like they missed earnings. Or like even see Gilead, which is one big player in that sector, recently missed earnings. You see like this, and we are looking at a weekly chart. So the big story here was like, these stocks were going up huge, and now there are some amount of like earnings pressure. So there is always a reason why a sector, especially if there is a secular trend. Secular means like 3 to 5 years trend. If you see something is down, then there'll be always a reason for it. So to sum it up, in order to use the sectors every day, then you need to like look at which sectors are leading on a 3 over the daily basis, on 5 day, 10 and 25 days, and probably YTD just for the sake of like which one, or even on 52 week. And then try and find stocks in the sectors in which the sectors are working. Like say if you are currently looking at it, like the silver and gold sectors were the one which are leading. Now that's where if you look for opportunities, you will find opportunities which will work. Or if you're looking for shorting, like airlines, solar, some of the weaker sectors in the last 10 days is where you'll find the opportunities. If you have any questions, if you want any information about how this is set up and all, you can always leave it in the comment, or you can always send me an email, and I will try and answer them in next set of videos. I will do another set of videos on this to get into some more detail on some other things to look at in sectors. But basically, if you have any questions, you can always look at it, and you can look at the first part of the video also. In the first part I did mess up a couple of things, but like as I said, like here you can find the component list, and the component list was not showing in the Morningstar because they have discontinued it. And if you have any stock, like say you have like say Ford Motor, and you want to find out what are the other stocks in this auto manufacturer sectors, then you go here and you open the industry watch list, and here you will find that there are stocks like Tesla or FCAU and all kind of things. Or like say in the pre-market, look, price line is down, right? And price line is down $99 or something like that. Now if you want to like know which stocks are there in the same sector, because there will be collateral damage, right? The other players in the industry will also go down probably. So then you can start looking at like say there is Kunar, there is Snow, there is BDU, ABMYT, there is like must be if you keep going down, you might have things like Expedia, which is a large player in that particular category. So it might in sympathy, it might pull back. So that's like really, and as of now, if you see this particular sector, which is like consumer cyclical sectors or leisure, that may not be like in a sector, may not be. Say let's go and see that actually, like say somewhere, where do you see that sector? See now if you see this sector, okay, here this is like bouncing back. Now if price line has a big capitalization, and if it does keep going down, then this sector will have a breakdown. And then like if it has a follow through like this, then you look and see here the trend was like for lasted around 26 bars, which is a month. So this is where you see a stock like price line breaking down, and if the sector will break down, sector will also have a breakdown. If more stocks in that sector go down based on price line, then That's the start of a downtrend in a sector, probable start of a downtrend. Look at it, sector was going up for a long time, corrected, there was a bounce and falling. So that's where you might find a shorting opportunity. The trick really is to do it daily, and if you don't want to use Telechart, the other way to use find sectors information free is on Finviz. I think Finviz has a very good sector page. If you go on Finviz and if you see the groups, on the groups page, see now you have again, like say instead of sectors you put it at industry, and once you put it at industry you will see that there is a 1 day performance, drug delivery, which is where the VRX and all bounce back, that's why. But on a daily basis you see that copper was down, and which is same as what you will get in your list also. Industrial metals were down. On a 1 week performance they have, like say, uh, probably photographic equipment down, semiconductor down. 1 month performance, silver, gold is up. So they also have a same thing, which is like basically what you can create in Telechart. And this is 3 months. In order to do 3 months you can just create a scan, see by say 25 days. So you can, like say, there are 75 days in 3 months, working days or trading days. So you can set up a 3 month kind of a thing. But really, in order to profit from sectors, you need to look at them on a shorter time frame, is what I would say. Sometimes sectors get into a secular trend, then there's a trend will continue for 6 months, 9 months, 1 year, couple of years also. When that happens, anyway, they will also be in uptrend on a YTD basis. They'll be on uptrend on a monthly basis, on a quarterly basis also. So there is no harm in looking at longer term sector trends. But for immediate profitability, or if you're looking at an immediate trading idea, then you need to look at sectors on a shorter time frame of 5, 10 or 25 days.